Hello, I'm Tracy Grimshaw. Welcome to A Current Affair. First tonight, money madness, the tricks and lies being used by some mortgage brokers to secure home loans for people who can't afford them. Then, when reality bites, the borrowers are left homeless and ruined.
We're really angry about what's happened to us because at the end of the day, you know, they've committed mortgage fraud and we want to find out why.
Wayne and Carol Stiles are about to lose their Gold Coast home 8 years after they bought it. They're the latest victims of dodgy deals by home loan brokers and banks that lend too much too easily. Wayne's furious, Carol's upset beyond words that their dream should end this way.
We never saw the full application on the loan application documents. We only saw about 2 or 3 pages that we were asked to sign, and then we found out we'd got the loan.
How did it happen? In 2005, they applied for a $250,000 loan from one of our big banks, but say they had no idea their broker filled in the forms stating that Wayne was earning $125,000 a year. It was a huge lie.
I was unemployed, and you have to be able to pay back the loan from your income at the time.
Also included in the loan application, non-existent cars and even imaginary stocks and shares.
They'd put in a Toyota Prado that we'd never owned, value of $45,000. We only had cars at the time worth about 20-odd thousand. They'd put in $50,000 worth of shares. We've never had any shares.
The broker got his substantial commission, but they never had any real chance of repaying the loan. They struggled on, but Wayne and Carol were set on the road to financial disaster.
In a hot housing market, we don't want to see an increase in loan fraud. Where we see brokers bending the rules, we'll act. You could go to jail.
Peter Kell, Deputy Chairman of ASIC, is on the rogue brokers trail in all states. So far, 8 prosecutions in 3 months and 15 more heading to court.
We've seen examples where people have falsified pay slips, where people have provided fake references from employers, where people have overstated the client's income.
He's sometimes amazed the brokers thought they would get away with it.
And in some cases, the most extreme cases, where the broker has created entirely fictitious clients in an attempt to get the loan through.
But where does most of the blame lie? With the broker who inflated a client's ability to repay a loan, with the bank who supposedly checked the application from the broker, or maybe even with the borrower who let their dream cloud their judgment.
We also want to send a message to anyone who's borrowing, who's tempted to push the envelope to go for that dream home. Don't get in over your head. Don't stretch the truth, because you'll end up in trouble.
So it's up to you, the borrower, to make sure, you know, everything is accurate.
Jo Uchukalo of consumer advocacy group Handle My Complaint. She's dealing with families who get in way too deep, and she urges them to lodge formal complaints with ASIC. But most importantly, to check the loan application. Be wary before they sign.
And go with your gut instinct of, this is someone who's got my best interest at heart.
Ultimately, the fraud is about greed. It's about brokers trying to get their hands on more commission, or in some extreme cases, trying to actually defraud the lender.
Well, at the end of the day, if they would have put the correct income and details into the loan application, we would never have got the loan.
Our message is treat your clients fairly, act in a reputable fashion, and you'll make enough money in the current climate.
Gee, it's a nightmare, isn't it? Joining me live in the studio now is finance expert Paul Clitheroe. And Paul, what's led to this?
It really is a horrible story, and those examples are just terrible. We need to realise, people do need to understand, that brokers are rewarded by commission, as Peter Kell points out. But the fact of the matter here is that consumers just have to be incredibly careful when they're borrowing money, because the simple reality is a broker makes more money if the consumer borrows more money.
OK. How do borrowers protect themselves from becoming victims?
Let's go through a few examples here. Now, for mine, one of the really first key issues here is you must personally complete your documentation, as you saw, Tracy, but you've also got to take a copy of that documentation and make sure you hang on to it to prove it is yours and it's as you completed it. The next point I think is very important is, remember, these are historically low rates. We've not seen rates this low for 50 years, and it's vitally important you allow 2 to 3% margin when rates go up, you can still afford to meet those repayments.
That's really good advice. OK, point number 3.
Look, here again, let's use common sense here. Basically, if anyone's offering you a loan that takes up more than about 35% of your before-tax income, that's your mortgage repayment, your car loans and your credit cards, your own personal safety warning sign should go on, Tracy. You've got to protect yourself.
OK, so you can do your own sums there.
Very simply.
All right, point 4.
OK. At the end of the day, if someone's saying, look, you don't have a job, don't worry, we can get you a huge loan, Tracy, you really do need to say, and this is my fundamental money rule, if it looks too good to be true, it will be. If you're getting offered a silly loan based upon facts that you aren't right, run for your life, Tracy.
OK, great advice as always. Thanks, Paul.
Pleasure.